Let's just quickly talk about the moves we're seeing this morning, particularly in the currency market. Dollar not doing too much. It was up about 0.25% yesterday, but is moving a bit against the yen today. What's happening there?
So I think it's really fascinating watching dollar yen over the course of the last 48 hours, because this is the classic indicator of sentiment. If you were just looking at the US equity market, you would think it was doom and gloom, and quite understandably so. But dollar yen, we're trading at the highs for the last couple of days, 112.75, 112.80. That suggests to me that maybe sentiment's turning here a little bit. And in fairness,
from negative to positive.
Yeah, absolutely. And it's taking the positives out of each market. So if you look at its performance overnight, it did well during the Asian session. It liked that rally you saw in the Shanghai Composite on the back of this talk about maybe some kind of support for the market from the securities regulator. I think that's the interesting bit to me, that the bad news that's coming in isn't hitting the dollar, isn't helping the yen, and it's not the only thing where you're seeing that kind of shift in sentiment. Look at Treasury yields. Treasury yields barely really moved during the US session yesterday, and then during the Asian session, we're back to the highs again. So maybe, just maybe, what we're getting an early indication here is after 3-4 weeks of incredibly bad news for markets, perhaps, just perhaps, sentiment's starting to stabilise once you look outside the US.
So clearly a stronger dollar against the yen could suggest a move back towards risk on, but stronger dollar against other currencies usually means risk off. And if we look at the move yesterday, up 0.25%, the dollar index, but really over the last month to date, 1.5% higher for the dollar. What's that reacting to, and could that be suggesting risk off?
I think that what that's reacting to, put the dollar yen story to one side, most of that move you're probably talking about shifts in European currencies, and there you've got very specific things going on. Clearly you've had the Italy story, that's still unresolved. We have to get to this point where the standoff between Rome and Brussels is finally sorted out, and my guess is it will be sorted out, but of course there's still got to be the play out there. And then there's the Brexit story, and the Brexit story continues to weigh on sentiment precisely because we've yet to get a resolution on the biggest issue of all, the border between Ireland and Northern Ireland. Nobody knows how we deal with that, and we've only got 5 months left. And as happened before with Sterling, the market's only just waking up to that risk. It's a little like 2016, if you like, February, March time, when people suddenly realised there was a real risk out there that hadn't been dealt with.
And possibility, of course, of change of leadership in Germany as well, another factor to watch. But just to bring things back to the US, Simon, what's your latest take on the data in the US and what that means for likely path of interest rates from the Fed?
Well, I think as far as I'm concerned, there's nothing in the data that really suggests that the Fed's going to make a radical shift in its path. So for the moment at least, I still think we're going to get that move next year. Do I still think there's a decent chance of maybe 3 moves next year from the Fed? Yes, absolutely. But do I also think that maybe we're getting close to the top of this economic cycle? Yeah, I think that's what the yield curve has been telling us for a little while. And I think a little bit the reason why we've actually had this stumble in markets over the course of the last few weeks is the realization that we're not actually that far away.